So good morning, everybody. I'm Caroline Hepker, Bloomberg Radio and podcast anchor here in London. We are broadcasting this discussion live on Bloomberg Radio, on DAB Radio and around the world. And the subject for discussion this morning, securing the UK's international competitiveness by building a growth strategy for financial and related professional services. So to the audience out there, I'm going to try to wake you up and ask you for some questions this morning, if you don't mind. To our panel, this is your opportunity to put a question to them on this important subject. There'll be a microphone going around the room, and I've also got an app. So we'll do that perhaps at the end of this conversation. But I just wanted to start with a very brief sort of introduction about Britain. And I will try to get that balance between the positive and the difficulties that Britain is facing. So Britain did clinch one of the few trade deals with the US. It faces still, though, a 10% baseline tariff. We've committed to higher defence spending just in the last few days, but with no real fiscal path yet to get there, and a battle now over cutting welfare payments. And the UK faces a great debt burden, more expensive to service that debt, 5 times more, in fact, than it was back in 2021. And the UK's economic growth remains very sluggish, despite the recent PMI data coming in June that was sort of better than expected. So who is securing and building growth in Britain? We know that financial services is one of the 8 key sectors that the government has put as part of the industrial strategy, along with things like clean energy and advanced manufacturing and creative industries, to try to build that growth. For the industry, though, it's about the tax regime, talent, not just non-DOMs, but also the fact that the Chambers of Commerce just this morning was telling Bloomberg that it wants no new corporate taxes, deregulations. On listings just today, we were reporting earlier this morning on the good news that reportedly the software company Visma has chosen London to list. So it's that public versus private markets debate here in the UK. And yet the industry also wants all of this, as Miles Selleck has been telling us and telling us on Bloomberg Radio, they want it delivered more quickly. And perhaps we're promised more also in the Chancellor's Mansion House speech. So joining me to discuss these issues, challenges and opportunities, Stephen Berger, who is Global Head of Government and Regulatory Policy at Citadel, Sarah Breeden, who is Deputy Governor of Financial Stability at the Bank of England, welcome, Tony Katz, who is Partner Global Co-Chair for Financial Services at DLA Piper, and Tiina Lee, Chief Executive Officer at Citi UK at Citigroup, as well as Jordan Sinclair, President for the UK of Robinhood. Good morning, all. Tiina, can I perhaps start with you? I was in your offices only a few days ago, and you're regular on Bloomberg Radio. And actually, Beata Manthi, one of your colleagues at Citi, very positive about the UK, about how the UK stock market could offer investors the best protection against an escalation in geopolitical tensions. We've got that on our minds at the moment. Why so positive? What is that based on?
So I think it's really important really to set the tone, and I know that sort of Bruce's comments I think were really important. Look, we continue to have innate advantages in the UK, which I don't think we can discount. And I think sometimes we do take them for granted in terms of really the position that the UK has in terms of financial services. But at the same time, I do think we need to sort of ask ourselves the question, you know, as a mid-sized developed country, do we have the right to thrive in this new environment? You know, Bruce talked about a multipolar world. What does that mean for the UK? And for me, as the CEO of Citi in the UK, I think the answer is absolutely yes. Financial services remains the UK's superpower. And when you think about the ways in which that industry can actually channel capital and investment, not just into the UK, but across the UK, but also connect the new and emerging trade corridors that we're seeing. So whether that be, for example, India into the Middle East, you know, the US into Korea, very often, where is that activity really taking place? It's still taking place in London. So I think the way that we need to sort of think about this is actually the complexity of this new world order and the role that the UK can play. Now, what I would say, however, is that when we think about driving growth and we think about the role of regulators, and of course, I defer to Sarah on this, but I'm not entirely sure whether it's the role of regulators to drive growth. However, creating the right regulatory framework such that we don't squeeze risk out of the system entirely, and then it then crushes growth, you know, to a meaningful extent. So, you know, there are so many areas in which I think If there's one message, it is we just have to move faster.
Yes.
Because the pace of regulation, and I think Bruce made a really good point, we all want global standards, but you are seeing that break down, and it's harder to get global standards and consistency. We see that in climate, in ESG, and even really in terms of Basel 3.1 has been an interesting journey. So remaining globally competitive around regulation without a race to the bottom is that balance that we need to try and strike. But I remain positive about the outlook for the UK.
Okay. To that point, I want to bring in Citadel and Stephen Berger. Stephen, in terms of the US perspective, we don't often get to hear from Citadel here in the UK, and I wonder what you feel about bringing capital into London. I mean, that seems to be the fundamental issue also for financial services in the UK, how you attract capital to Britain.
Well, thank you. I mean, first I'd like to start by just welcoming the recognition in the modern industrial strategy that financial services is a key and critical sector. Indeed, I think it's a vital national asset of the UK. Bruce shared some of the statistics, but it accounts for 9% of economic output, 12% of tax receipts, nearly 100 billion pounds of net exports. So I look forward to the unveiling of the financial services growth and competitiveness strategy next month. And when that was, first previewed, something that stood out to me was the use of the word unashamedly in terms of being willing to unashamedly champion the financial services sector. And I think that marks sort of a sea change from, let's say, a decade ago in terms of moving from a more confrontational to a more collaborative approach between the industry and the regulatory sector. And I think that change in perspective is fundamental to working together to unlock more capital that can then be deployed to fuel innovation and growth, and also find ways to allow markets to generate better returns and wealth creation for investors, both retail and institutional, and whether retail is investing directly or through pensions. So I do think that there's a significant, not to be underestimated, just change in the approach and the attitude that's being taken here in the UK, and that's going to pay significant dividends in terms of unlocking more investment and growth.
Okay, Stephen, thank you very much. What do you think, Sarah Breeden of the Bank of England? Do you detect a distinct change? Is there more positivity and emphasis on this industry to deliver growth?
Let me say three things. The first is just to underline what a successful international financial centre we already are. I like to point to two things to support that. The IMF describes the UK financial stability and the UK financial system as a global public good. And that goes to Tiina's point, how we connect financial systems all around the world. The second thing I love to point out is that there are more dollars traded in London than they are in the entirety of the United States. Again, underlining the fabulous position we start from. I would say this, I know, but I do think our regulatory framework contributes to that. Robust standards, a resilient system, boosts competitiveness because it gives firms, customers, counterparties in financial markets, home regulators from all around the world. It gives them reassurance that they can do business in the UK safely and with confidence. And that also includes our supervision as well, not just the rules, but the way we deal with firms, the way we deal with other regulators. And everybody will have their own opinion on that. But my sense is that we're nimble, we're collaborative, we look to work together. But of course, there's more that we could and should do to improve on where we are. And there are 4 themes that we have in mind that are perhaps worth sharing. First, regulatory efficiency. Second, safe innovation. Third, safe openness. Fourth, productive finance, making sure that we're pointing finance at things that matter to the real economy. And there are things that we're doing on all of those. But it does start from a great position, and we just need to build on it and do better.
Jordan, how does friction feel to you in terms of regulation and supervision in the UK? You're running a business in Britain, trying to get people to invest more, trade more. A lot of that is perhaps professional, more professional traders, and looking at US assets. What do you think of supervision, regulation, and trying to grow the business in the UK?
Yeah, Robinhood historically was a US-based business, and we've grown to 25 million customers offering improved and better access to investing. And when we look to grow internationally, the UK was our natural first choice and is our first market outside of the US. Regulatory leadership was an important factor in that decision, a strong framework across the different regulators, that reputation across other markets as well, and that collaboration between business and industry. I certainly have seen, I think we could probably all say that in the last 18 months, that collaboration's only increased. You certainly aren't just sending emails to Stratford and getting an email back. You're there in person and you're working together. And we discussed this morning tokenization and that willingness to learn. I think there's a lot of strength in that. And I think Tiina's point on being positive is correct. There's a lot of the foundational elements. We are by nature a global financial services hub. We are competitive. We think globally. We have all the right ingredients, and that innovation is still to come. I think what we have to not do is rest on our laurels on that innovation and act. There are other markets that want to catch up. There are other markets that are trying to compete for business. I think we've got, just from the retail investing perspective, advice, guidance, boundary review, consumer composite investments, and digital assets roadmap all lined up this year. Those are massive levers to creating better investing journeys for customers in the UK, where that access and participation relative to other markets is woefully low. In the US, almost half of individuals have household wealth in individual stocks. In the US, in the UK, it's less than 20%. We see that as a massive opportunity. Reduce those barriers, improve those journeys. I think it's on all of us to increase that.
Thank you, Jordan. Sinclair from Robinhood. Tony, Katz, can I ask you on DLA, from DLA Piper, in terms of your view, I mean, the Prime Minister was out announcing only just today that with the trade deals, the government is going to try to get professional certification recognised. In other words, to try to sell the services sector abroad from the UK much more. I mean, you're nodding in approval. Is that enough? Is it fast enough? Is that the thing that is going to make the difference?
So, Karen, I guess the perspective, this is a global competitive market. The UK is competing. And we're dealing with clients all the time who are considering, is the UK, should they, particularly from the US or Asia, should they pick the UK? How do they enter Europe, or where do they choose to innovate from? I guess a perspective, when we have discussions, we did a survey recently, and that survey suggested a lot of positivity globally in the financial services, about 80% positivity, and particular positivity, the US and the UK were the top in terms of positivity. So those are the positive zones. Since that survey, probably obviously we've had a rougher time in the early part of of this year, of 25, but recovered the last few weeks, so much more activity we're seeing, so there's a positive attitude. Where are we seeing the positive attitude? We're certainly seeing positive attitude from the bigger players, I think. I think the big institutions, the banks, are probably showing it's more positive. I think the smaller players, the type of fintechs, are struggling more, and I think they see it's more competitive, interest rates are more problematic, compliance costs are higher. So I think that's sort of the territory we're probably operating in at the moment. We talk about, I guess, the regulators and the role of regulators, which is fundamental, the stable, important ingredient. I guess, what do we have in terms of, first of all, ingredients? We are in this fantastic place, I think. We're a real tech hub. We've got tech talent, and we've got the greatest, perhaps one of the greatest mature financial services institutions. We've got a stable, predictable regulator, and those all come together. But we've got, I think, a few things to think about. I think in terms of strategy, what more do we need? Certainly, I guess, firstly, from the regulator point of view, So do we hear all the right things, don't we, about engaging for growth is really important. That is, there's a huge amount of listing going on. We had a meeting earlier this week with a bank looking to set themselves up in the UK, both the PRA and FCA, and frankly, I've never seen such open doors before, welcoming in, how can we help, which is absolutely brilliant as a welcoming. I think there's still a twin voice. I think there's still, how do we deal with that voice of a regulator asking all these information requests, which are just phenomenal still going on. I think reality, we've got certain policies of the regulator talking about naming and shaming, thankfully that's gone, but that was against, I think, in terms of being helpful. I think there is a huge amount of power sits in supervision, executive powers, which frankly firms find very difficult to engage with because you can be told what to do without some. So I think positivity is really important. I think we're seeing that. But I think so, coming back to the regional point, there's a lot to be done, particularly focusing on what the strengths are, I guess, on the digitalization. AI, really, really important part of those strengths, and how we take advantage of those. We've got a much more rigid approach in the EU. How do we sit more with a laissez-faire US approach?
Exactly.
Yeah.
Well, let me bring in Stephen Berger. What's your perspective? Over in the US, President Trump is ripping up regulation rapidly. He's going to have as big an impact on European and UK budgets as he is perhaps on the US, given he's got the big, beautiful bill, the spending and taxation bill, but also on the NATO defence spending, that's going to alter things enormously. So at that speed of change, perhaps Europe is behind us in terms of deregulation, but where do you see the UK actually delivering? It needs to deliver on the deregulation element, surely.
So I agree that there are ample opportunities for further streamlining and simplifying regulation in the UK to help unlock more growth and innovation. At the same time, I think the UK benefits from stability and thoughtfulness that investors and market participants value. So I don't know that ripping up rule books is the right approach. I think people value the stability and predictability of the legal and regulatory framework. I would note, I think we've seen concrete examples of the collaboration I mentioned. I think, I'm involved in sort of regulatory policy all around the world. Like the quality of the consultative process that's pursued by the FCA and others in the UK is top-notch anywhere in the world. Like the quality of the calls for evidence and the discussion paper. And then just another example, given Sarah's here on stage, for the past decade, there's been an exhausting amount of hand-wringing about risks that are potentially posed by non-bank financial institutions. The Bank of England rolled up its sleeves last year and conducted this system-wide exploratory scenario to actually gather evidence and look at the intersection between the banking sector and all the other non-bank financial institutions to really see what vulnerabilities existed instead of just musing about it without any evidence. So I do think in the UK we see a high degree of quality and commitment to that engagement and collaboration with the industry on the regulatory framework.
Tiina, what do you think would unlock the most growth looking at this sector? I mean, you talk of ring fencing being scrapped, talk of changes to ISAs. What do you think would deliver the most?
Well, as one of the largest payments banks in the world, so we transmit $5 trillion around the globe a day. What we're probably most focused on is around, what does the financial markets ecosystem look like in the future? And that really means, what do the payment rails look like of the future? And that's really where we're spending most of our time in terms of, what does that digital framework look like? We've been encouraging the government in terms of, providing a bit more of a legislative framework around that, and they've just recently issued their draft SI in terms of digital assets, which I think is absolutely a step in the right direction. Because what it does is it then begins to give certainty to large firms like ourselves to think about, how do we begin to invest in what is going to be the technology of the future. Yeah. So it really is about the payment system, really, rather than purely just crypto assets. So that I think is really good. As you've alluded to, there's the Genius Act in the US with stablecoins. I thought it was quite interesting, the news that came out overnight with regard to the European Commission and perhaps what they're thinking about in terms of EU-issued and non-EU issued stablecoins. And therefore, what is the role of the UK? Because we want to attract that activity into the UK, and therefore providing that kind of framework becomes really, really critical for a firm like Citi. So I think we're on the right path, but really pace is everything. And I think what you're not hearing anywhere on this panel is a desire to have a race to the bottom when it comes to regulation. But when I think about it, and here we are sort of 17 years after the financial crisis, for me, I think it's a little bit about like scraping all those barnacles off the boat so we can go faster. You know, we've had cumulative regulation, and I think all the scrutiny that's starting to happen around duplication in the rule books for the PRA and the FCA is just to be welcomed, because actually there's just been a lot of regulation that's built up, and actually making sure that that's simplified without actually degrading regulation is really important to drive growth.
Although there's also the question of private markets and oversight over private markets in the UK, the risks. I mean, maybe Sarah, on AI also, there's geopolitics to think about. There are many threats.
Maybe just one point, and then I'll just hand over. The one area where I sort of think will be an interesting debate is when we think about the Basel standards around risk weighting for crypto. You know, at sort of 12-50%, that's prohibitive in terms of regulated firms. So as we think about how fast this market is moving, is that something that actually as a industry we want in the non-regulated sphere? Or is it better that it's supervised appropriately with the right oversight, and actually we think about that in a different way? But I think that's a very live discussion. So,
Sarah Breeden, yeah.
Can I say something about payments, and then I'll come to private markets? I couldn't agree more with Tiina that payments are foundational for how we can support innovation and support growth here in the UK. What we are trying to do at the Bank of England, working with Treasury, working with FCA, is produce a mixed ecosystem that can support new forms of money, whether those new forms of money are issued by us as the central bank, by banks, or by non-banks in the form of stable coins. And that's really important because there's so much opportunity to drive efficiency through the system. You see costs of doing cross-border payments that are tariff-sized. There's real opportunity there for us to innovate safely. And a fabulous thing that we've done at the Bank of England is just upgrade our wholesale payment rails that will give a brilliant platform, a brilliant infrastructure on which all of the industry can build. So with strategy, infrastructure, regulation and leadership, I think the UK has got a real opportunity to lead the world. And I ask all of industry to come on that journey with us. On private markets, I think what we need to do is a bit like what we did with the system-wide exploratory scenario on understanding core markets. Roll our sleeves up, try and understand what are the risks. Let's be clear, private markets have been a real source of finance for the UK real economy. That's a good thing, but what we need to do is ensure it is sustainably there. They're in the good times, they're in the bad times. It's a business model that has grown in an environment of low rates. Let's just ensure that we have confidence that it'll be there as inevitable stress hits. And the techniques that we used in the SWES that Stephen mentioned could be something that's useful.
And on that note, I would like to ask you if there are any questions out there. I haven't received anything on my iPad yet, so I'd really like to encourage you to put some of your questions to this opening panel of what's going to be a very busy day. Jordan, I would like to ask you then for your, in the practical sense, what does that mean as a provider when you think about payments?
I think customers, their demands drive a lot of that innovation, right? I think customers, retail is often not given the credit for what they expect in terms of access to instruments. They expect access to retail private markets, equities. They're interested in an array of markets, derivatives. They're interested in multiple payment types because there's 9 million crypto accounts in the UK, right? They already are experiencing.
But it's still seen as a risk.
I think that's the opportunity, right, is to create a regulatory framework that looks after our customers and creates a framework for businesses to run in a way in the UK that makes it competitive, but also doesn't deregulate it or regulate it to a point where customers aren't giving access anyway, because we already see there is the demand. So I think it's an important balance. I think that the pot of capital we need to activate better is the retail pot, where we have a lot of cash that is earning less than the inflationary rate in some cases, but that can trickle down into the economy. And I think where we need to start, though, is why aren't those customers investing? What are those barriers? How do we improve education, confidence? How do we make the UK an even easier place to become a first-time investor?
What about a nudge from government then on ISAs? Are you expecting that from the Mansion House speech? Would you like to see it come? I'm sure you would.
I think ISAs is one way you can enable investing, and it's a fantastic product. £20,000 tax-free. And when I tell my US colleagues about that, I think it's amazing. But you've got to make those journeys easier for customers. Are risk warnings appropriate? Is a cash ISA and a stocks and shares ISA journey similar? Are customers given clear information? Are there unnecessary barriers in terms of costs to open an account? The stocks and shares ISA had a lot of platforms. We did some research recently, and in certain representative groups, they thought they needed £2,283 to open a stocks and shares ISA. That's not the case. You need £1, and a stocks and shares ISA doesn't need a cost either, where a cash ISA often on platforms is free and customers will gravitate towards that. So I think there's ways we can enable it, and I think we can really activate that pot.
Tony, what are the opportunities in the industry if you think about the legal framework in the UK when it comes to AI and crypto assets also?
Yes. So we've got, I guess in both those spaces, we've got decisions to make, don't we? So AI is this absolutely fantastic opportunity in the financial services industry. Everybody is embracing it. We've probably seen that the embracing has been a little bit more on the operational and the compliance side, bit of obviously credit checking, but more on the operational monitoring, financial controls. And there's probably going to be a move towards action and dialogue. But obviously, as we move towards financial advice, and we'll see what comes out from Nikhil, that will be a huge opportunity. If you can change actually the way you engage with customers, I think that will be really, really, really important. I think clearly on the crypto side, there's been a complete change of attitude, obviously from a position where we had a registration approach in the UK. Reality, it was all about actually the risks involved and the concerns about financial crime, to now bringing in a regime which looks a lot like the European MiCA approach. It looks very similar. So there is, it does obviously put heavy burdens in place in terms of operational resilience and certainly on prudential requirements. So it's a welcoming approach, but it's similar to the European approach. And I guess we've got to see how that plays out in practice. Are we going to see such a high level of discouraging of new entrants the way we've seen in the existing regime, which many of the entrants were refused, as we know? Will that see a change? But I think the reality is that's where the money is. People invest in, I guess, from a crypto point of view. So we've really got to we've got to welcome that.
Can I add something on that? How do we embrace innovation? How do we ensure it's safe? How do we shape it, not slow it? I think there's a number of steps. Firstly, collaborating and learning. We've set up with the FCA an AI consortium to try again and roll our sleeves up and understand what are the uses, what are the risks, and how do we support that. Second thing, after collaborating and learning, experiment safely. Use controlled live environments. We've got a digital security sandbox in the UK set up jointly by us and the FCA, in which tokenized real-life transactions are going to take place. The digital gilt will be in that. We will explore putting wholesale stablecoins in there. The third thing we need to do is regulate. And I think what we try and do in the UK is kind of be on that tightrope, not rushing to regulate, but not just hoping for the best either, trying to learn and provide the right regulatory frameworks to support innovation. And then my final point is about infrastructure, providing enabling infrastructure so that the private sector, whether big or small, whether local or international, can come and innovate here. And that model, we can point that at payments, we can point that at tokenization of assets, we can point that at AI. And I think that is a good way to support innovation in financial services. And for me, that's the best way to drive growth.
Stephen, in your view, how is the UK doing versus Europe? I know that your role is so global. In terms of the pace of that regulatory change and perhaps the easing and simplification of the rules in the UK, how is London faring versus Europe? We spent a lot of time on Bloomberg looking at, what we're calling the wealth exodus, at least some individuals going to Milan, looking to those other markets, to the Middle East. Put it in that regulatory framework for us here in the UK versus the EU.
I think the UK benefits from being more nimble and let's say only having one cook in the kitchen, so to speak. So, invariably, I think the UK is proving more agile in that regard.
What do you think is going to be the most important thing when we come back this time next year? Because it's quite an early scorecard, a year into a new administration. And I know that the FCA has been working on some of these issues at least for 18 months, 2 years. Where do you think we need to be in a year's time?
Look, I think it's a very good question. As noted, there's a lot of strategies coming out. So it's translating those words into actions. And I think there's so many individual specific elements that you can point to that can, I think, deliver, positive change. One that we're particularly focused on is the emergence of consolidated tapes in the bond and equities markets, which are going to make those markets much more transparent and, by extension, we think, liquid and a better environment for investors. There's all these individual elements, but I do think it's hard to find one overall narrative that pieces them all together. But I think there's a long checklist, and so it's just how many of those items can we stay focused on and get across the finish line.
Yeah, absolutely. Questions? The audience, what has this sparked for you? Gentleman at the front, if there should be a microphone weaving its way to you very swiftly. Maybe you could tell me your name. Oh, actually, sorry, the lady at the back. Yeah.
Yes, hi, my name is Bernadita Jimenez and I work for MUFG Bank. And this is actually a question about, I'm going to use the B word, the Brexit word. And it's a question that you were trying to address about, divergence, regulatory divergence, because we all expected that we would see regulatory divergence, and we are seeing regulatory divergence. Now, when you have multi-branch clients, that can be quite inefficient for banks that are operating in both the EU and the UK. But what we're also seeing is that the EU is sort of taking actions to actively push away or limit the influence of the UK in the EU. And some examples are CRD 6, Article 21C, that requires that you establish a subsidiary in the EU if you want to do banking business there, or EMIR 3, which means that you have to have an active account with a clearing house in the EU. So we're seeing more of these type of actions. And my question maybe to Sarah is, what do you think is the right strategy? Deregulation, so that means basically we lower the standards. Retaliation, so that means if you don't let us in, we're not going to let you in. Or aligning. But aligning somehow challenges the whole purpose of Brexit, which was we want to have our own regime.
So, look, let me give you my perspective on that. It is the inevitable consequence of a new trade border having been created that there will be different approaches either side. And indeed, that's where we get the opportunity. I think Stephen talked about how nimble we are in the UK at a time where innovation is happening at pace, our being able to be nimble and respond is helpful. I mentioned regulatory efficiency before, being able to focus on outcomes, because what we're doing is delivering regulatory outcomes, not a single banking market across 27 different nations. That's again an opportunity, I think, for us. And I guess the final thing I'd say is that there was a lot of talk in the run-up to us actually leaving about what a serious threat to the city Brexit would be. Actually, our lived experience of that is not consistent with those things that we were worried about. It is the case that some clients have to be served from Europe, but it hasn't led to a serious diminution in the role of the city as we had feared.
Caroline, I guess just one comment of picking up, and that's the choice, I guess, is do we mimic the EU, or do we go and have a more this laissez-faire? And I think we've got to decide where is the opportunity, because there's certain practices, and we saw it from GDPR and we see it with DORA. The reality for global players, they're going to have to just implement that. So was there an opportunity to be different? I don't think so. I think we just got to accept in certain areas, actually in those type of spaces, let's mimic. There's no point in imposing, trying a different standard. But we think about where they are, and I think AI and crypto are probably two where there is a real opportunity of standing out and being different.
And you make a great point. Look, let's not be different for the sake of being different. That's in nobody's interest. And we can be a trusted partner working together with the European Union in designing frameworks. That's what international standards are all about. But there may be opportunities where it makes sense for us to be different.
Just want to add a few thoughts on that. I don't think we should look at competition as a zero-sum game. So when I have a competitor and they're out competing me, I step up and I improve myself, right? So I actually don't think, to the extent that both the UK and the EU are pursuing their own competitiveness strategies, I don't think it's necessarily one at the expense of the other. The other thing that I think is good that we're seeing is, despite, to your point, let's not be different for the sake of being different. So I think the alignment on the timeline for the transition to T+1 settlement, for example, is a very positive step. I have a hope that as consolidated tapes emerge in both the UK and the EU, we might actually just have one consolidated tape provider who provides that service for both markets and helps stitch those things together. And I think we're finding some solutions on the challenges of cross-border clearing to maintain the efficiencies and economies of scale in that realm, while also, allowing there to be choice and competition.
I hope that answered the B question, the Brexit question. I think it's a long time since I've said that word, actually, which surprises me. Right, anybody else? Yes, please, at the back here, if you don't mind. Yeah, that would be great.
Do you want me to go?
There's a lady there with a microphone for you.
Shall I go, Caroline? Hi. I've got the mic.
Oh, sorry. Sorry. Go ahead. Big room,
I guess
thanks.
I've got it. John House from the Linked Payment System. So payments was talked about a lot, and it's an example where North America is facing in one direction, commercial stablecoins, and Europe is facing in a completely different direction, it seems to me, in the CBDC. So is this an opportunity for the UK to bridge between the two, or is it a huge danger that we drop down the crack and don't get anything?
Sarah, I think it's...
I want to answer that question. I think it's a real opportunity for us to develop a multi-money world, a way of being welcoming of all of those. It's what the city does, right? It doesn't choose. It supports innovation in forms from all around the world. And I think us being able to support stable coins, support tokenized bank deposits, think about the important role of central bank digital currency, most obviously in wholesale, all of that is a real opportunity for us, a multi-money world here in London.
I'm just aware that I want to get through, yes, the questions. Go ahead. Please.
Hello.
Yeah.
Hi, the name is Orestes Nikou, Deutsche Bank. So we've discussed financial regulation, but what about other measures that the government is taking, other reforms or changes, and how do they impact financial services? So just to name a few, workers' rights bill, taxation, non-dom regime change, and all these other measures. How do they impact the competitiveness of financial services?
Yeah, I mean, this is a major question, isn't it? And the numbers are not in for the number of non-doms who have left, or not so far. But yeah, the talent, visas, all of those issues are hugely important. Again, we don't want to be negative about London. On the other hand, we have to think about whether this is a positive environment. I wonder, Tiina, your thought on visas, on attracting talent? That's hugely important to Citigroup.
It's massively important. I mean, we have 130 nationalities working at Citi in the UK. So for us, it is about how do we manage to attract and retain talent. That's domestic talent that decides to stay and not go somewhere else, as well as attract international talent. So, of course, everyone's focused on the non-doms, but at the same time, there have been sort of, further statements around, for example, extending the indefinite leave to remain until you get settled status. There is an indication that they are looking at a carve-out sort of in the white paper that says actually for skilled people, for talent that we want in this country.
But it's still a barrier, isn't it? It's still a big barrier.
Which is why they need to move quickly to provide clarity, right? At this point, there is sort of an intention to say that actually they can fast track, but we have a significant number of people that are on the settled pathway right now. So what's happening to those individuals that have decided that they want to make the UK their home, they want to stay here, build their careers, have their families, and now have this uncertainty. So these are the types of things that should be relatively easy to fix in terms of actually providing that clarity around continuing to provide a framework to attract skilled people, whilst at the same time very mindful of the challenges they face around illegal immigration.
I mean, I do think it is a bit of an issue at the moment as we go in 1 year into this government. It's about whether or not it is truly a pro-business government, which is what, when I interviewed the Chancellor before the election, we were talking about, and she was very keen to point out, and she had many conversations with lots of people here in the room. In terms of financial, Tony, your view in terms of attracting talent, just briefly, and then we better wrap.
Yes, as a competitive environment, obviously a lot of the issues we're talking about in terms of non-doms will carry. Obviously, this is the most wealthy, isn't it? So it's only a small portion of the population, but they are the most mobile. And then obviously others follow. But I think the strategy needs to be both for those, and it needs to be a way of actually now, whether the analysis was done appropriately or not, but it's got to be based on a pure revenue model, what delivers for this country. I think when the government came in, I'm not sure that analysis was done, but certainly we are seeing people have, as we know, have taken the decision on the basis of that, and we need something to turn that around.
So was that a misstep?
Well, we certainly, it's a pity that has happened. So many people have left.
And Sarah Breeden, on your view on that, on talent staying in London?
I'll stay in my swim lane, but I'll recognise what the others have said.
Right, I think we shall wrap it up there. And thank you so much for listening. Stephen Berger, Global Head of Government and Regulatory Policy at Citadel, thank you for your time. Sarah Breeden from the Bank of England. Tiina Lee from Citi UK, Citigroup. Jordan Sinclair at Robinhood, thank you. And Tony Katz at DLA Piper, Global Co-Chair of Financial Services. Thank you all, and thank you for listening this morning. Thank you for your time. We'll wrap it up.